This is your Wall Street wake-up call. July retail sales remained unchanged, while analysts had expected a 0.4% increase. Joining me now is David LEBOVITZ, the global market strategist at JPMORGAN Asset Management. So David, not a great number here, unchanged in July, especially coming off of that 0.8% increase here in June. Why do you think the consumer sort of stayed home in July?
I think that there's just a lot of uncertainty out there. We saw economic growth slow in both the first and the second quarter, down from that 2% pace that we had been averaging thus far in the expansion. So I think that you're maybe just seeing people stop, pause. Brexit has been going on. There's a lot of uncertainty surrounding what's going on in China. And as a result, I think the consumer just took a break. I don't think that this should be read into too much. I don't think it's terribly troubling. I think it's just after a very strong June, the consumer cooled off a little bit in July.
Well, and of course, we're also talking about retail earnings today. Of course, JCPenney beating estimates, but they still posted a loss. And, Macy's beat estimates yesterday, but they're still closing 100 stores. What do you make of the retail sector right now?
Well, I think that we're seeing a bifurcation in the retail sector. And on the one hand, you have the traditional brick and mortar stores, which are losing their appeal. But when you look at online retailing, it's remained relatively robust. So I think you're just seeing a change in consumer preferences. And that preference, that new preference, is to shop online. People aren't going to malls. They're not going to stores the way they used to. And as a result, those brick and mortar retailers are struggling.
Right, and I believe we have non-store sales up 14% over the past year, so that's pretty impressive. Let's also talk about the Federal Reserve impact from all this. Obviously, we're just about a month away from that September meeting. I think the big data point until then will be the August jobs report, and we're still a few weeks away from that. But obviously, the Fed is looking at this one.
Yes, absolutely. And in addition to the August jobs report, I think you need to watch Chairman Yellen's speech at Jackson Hole later this month very closely for any cues that the Fed might be looking to hike rates later this year. Our base case is that the Fed will move in 2016. In my view, it's going to be in December as opposed to September, but we need to parse the statement at the end of the month and then watch that jobs report very closely for a more concrete indication.
But of course, Yellen will use that speech in Jackson Hole to sort of prep the markets if she does indeed want to move in September, barring any unexpected, market sell-offs or global uncertainty that could happen between the speech and the Fed's September meeting.
Exactly, and I think the key element there is global uncertainty. Do financial markets stay calm? Do things in China continue along their current trajectory? We've seen in various Fed speeches that they're watching this element of financial stability and not wanting financial conditions to be too tight. So I think that we really need to watch. We need to see the forest for the trees on this one. It's not going to be any individual data point which causes the Fed to go or stay.
All right, and just quickly before we let you go, of course, we had all three major indexes close at record highs yesterday. What do you make of that? Is it going to be this sort of trickle up for the rest of the year, or do we get a correction that maybe gives people an opportunity to get in?
I think that we will see a bit of a pullback in the market later this year. I'm not sure whether it's going to be the Fed, China, the U.S. elections, but I do think that at some point the market will cool off. But, Scott, what we're seeing here is the wall of worry, right? Everybody's skeptical, but the market continues to melt higher. So, in my opinion, this isn't one that you want to fight, and I think that risk assets have upside from here.
All right, and though we did see a rise in 10-year yields off of this weak retail number, so we'll be watching that, of course. All right, David LEBOVITZ, the global market strategist at JPMorgan. Thank you for joining us.
Thanks for having me.
I'm Scott Gamm, and you're watching The Street.